Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a failure at the 65 to 67 resistance, which resulted in a range extension into the 44 to 46 support, where responsive buyers were active on first test. So clearly in the overnight session, the sell side has been dominant. Now heading into the open, our short-term bias on the day time frame is going to be neutral bearish. So that means that we understand that the sell side is in control, but at the same time, the market is quite oversold into support and the downside could be somewhat limited. So we have to assess the situation in real time and see whether we are continuing to see excess broad market weakness and sustained downside momentum. If that theme continues, then of course we can test the support zones below. But if we're not really seeing continued downside momentum, then we could just balance within the overnight range, and we could actually even go all the way back up into the 65 to 67 resistance. So we do have to still maintain a fairly flexible bias where we're not getting overly aggressive on the short side. Now, of course, given that yesterday marked a multi-day bounce breakdown, we can expect sellers to be active at the resistance zones above, but we do have to be mindful of trade location. We can't just blindly short the market as it's testing support or after it has already expanded the range into support. That would be quite risky, and responsive buyers can still defend at the support zones below. And that's why our short-term bias is not full-on bearish, it's actually neutral bearish. So we do have to be mindful of where we're shorting the market and still be open to the idea that if larger time frame buyers step in, we could see a move back up towards 65 to 67. And if we start seeing some big upside momentum, then given the expanded volatility and volume, even 74 to 77 could get tested. But again, we would have to see some big upside momentum in order for that to happen. On the downside, below 44 to 46, we have support at 38.5 to 40.5. And then as we push lower, we start testing larger time frame support. So for example, the 30 quarter to 32 quarter is a larger time frame area of support. The 22.75 to 24.75 marks the lows from April, and 17.75 to 19.75 marks the lows from March. So at that point, we would be testing some bigger support, and that means it can attract some larger time frame buyers. So right off the open, how the market responds to the 54 quarter to 56 quarter pre-market resistance is going to be a nice tell. If we can take that zone out to the upside, then it would open the door to test 60.75 and 65 to 67, where sell side can still defend. And then on the downside, if we continue to see a lot of broad market weakness and momentum, then perhaps we can push below 44 to 46, but that is valid support until broken. And we do have to maintain a fairly flexible intraday or real-time bias and just see how the situation develops, because the market is quite oversold into support, and it wouldn't be surprising to see responsive buyers starting to jump in at the support zones here. So given our neutral bearish short-term bias, that means that we are still going to be open to taking long setups when the market gets exhausted into a nice area of support. And of course, we'll still consider short setups at the resistance zones as well. So those are the main thoughts heading into the open. Let's see how the market responds to the pre-market resistance and initial support zone. That's going to help us establish our real-time intraday bias, and we'll take it from there.